So as during the discussion with your colleague in Frankfurt, some investors are indeed anticipating a rate cut already today. As a matter of fact, a 40% chance of a 10 basis point rate cut seems to be implied by the latest OIS pricing. We think that a rate cut today would be premature, even if the ECB is trying to preempt the Fed, which is still to meet and cut rates. Historically, they were always a bit a step behind, if you wish, so they may indeed wait for the July Fed meeting to act on rates. With that in mind, some negatives clearly in the price of the euro at the moment. Our own positioning data also highlighting that euro shorts have reached another high there. So from that point of view, we think that we may be in for a bit of a short squeeze in the euro in the aftermath, in the immediate aftermath. That said, it provided that Draghi delivers, provided that indeed he convinces the markets that a big, sizable easing package awaits really about a month or so from now. Chances are that investors will be using any euro rebound as a selling opportunity. In other words, Draghi will likely cement the role of the euro as an attractive funding currency. So any rebound, they are likely to be an interesting selling opportunity.
Why would today be too premature for that rate cut, as some analysts are expecting? Why not now instead of just a month down the track, a month or so down the track in September, when we've had this raft of pretty poor economic data, and just yesterday some poor PMI prints, particularly in Germany. So clearly the Eurozone is calling out for some sort of stimulus.
Indeed, it's a fair point. And when clients are indeed anticipating something, most of their arguments do refer to the recent deterioration in both the real economic and indeed inflation data. That said, traditionally, if you wish, the ECB was relying on its forecasts. Really, they really will want to wait and see how the data, what the impact of their data is on their own forecasts before they really act on that. And at the time for the new staff projections is not July, it is September. That is one reason. In terms of being preemptive as regards the market impact of a rate cut, aggressive rate cut by the Fed on euro or indeed on the Eurozone financial conditions, we really doubt that even if the Fed is more aggressive next week, given market pricing, given how much is expected from the Fed itself, we don't think that euro rebound or any euro-dollar rebound will be as significant, so that to really produce an unwarranted tightening in the Eurozone financial conditions, which will jeopardize growth or indeed will jeopardize inflation outlook in August or indeed beyond. Granted, that is a risk, but I think that is a risk that the ECB is willing to take at this stage.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.